Ladies and gentlemen, Nvidia just delivered a blowout results and crushed stock market and Wall Street expectation. And the AI bull run is set to resume and possibly even break all-time high again by the end of the month. Let's watch on, shall we? So Nvidia just announced its results and it really crushed Q3's expectation. And the AI mega bull run is set to come back again. So let's take a look at this talk about AI bubble bursting and AI, going risk on and all the things that are happening right now in the AI space. But I'll give an assessment of the most important few that will fan the stock market fire right now. So the numbers of Nvidia, the $5 trillion company right now, is way above all expectation, and it beats every matrix. So in terms of Q3 revenue, it's 57 billion above $55 billion expectation. Is a plus 62% year-on-year growth. There are very few business can plus 62% year-on-year growth. Now, revenues is just vanity, but profits is sanity, and this is where profits is now at $32 billion, and that's a 65% growth year on year. So that's a earnings per share of $1.30 versus $1.26. The data center revenue growth is phenomenal at 51.2 billion above analyst expectation of 49 billion. And right now, basically, it's next quarter expect guidance is $4 billion above market expectation. So these are mega cash printing machine right now, and this is set to set the whole artificial intelligence machinery and the bull running again. Now, just to put things into perspective, this is not a short-term thing anymore. They have a $5 billion backlog all the way through 2027. That means you buy now, you only get in 2027. That's how big and huge their order is. They got severe shortage of their GPUs and their chips and their products. I love to be in this kind of business if I can, but I think this is unique to Nvidia, and we can almost assure that their business is going to run for at least 1 to 2 more years in a very powerful way. Even the consumer GPUs are actually solidly booked all the way to 2027, and even automotive AI, okay, 100,000 vehicle deployment by 2027. They have a partnership with Uber and a massive scale deployment of 100,000 vehicular that requires NVIDIA drive stack, and this is going to create a new stream of revenue. And wow, no, I just love to be in this business. Now, the stock market is already responding. The S&P 500 futures is already soaring 1.22%. Now it's going to reverse the very pessimistic outlook that we have over the last 2 weeks or so. And the Nasdaq has already booked a an increase of 1.6% for the futures market. So it's all solid and good news right now because the AI bull is confirmed and set to come back. Now, Jensen Huang, the CEO and founder of Nvidia, said that this is not a bubble. Of course, you'll say that, right? Okay, but I would say that this is at most expensive, but not a bubble, because in traditional bubble sense, things are hot air. No, they have to be hot air, but this is not hot air. This is real solid sail, okay, of everything that is running. So this is a powerful AI growth that is cash printing machine for many companies, especially for Nvidia. Taking a look at what analysts is saying, okay, and investing.com say that the verdict is simple. The AI revolution is nowhere near its peak. Data center scaling is the central need for every tech business right now in the world. Nvidia is far and away the leader for AI focused chips. Dominance in AI silicon is defensible with high ROIC economics. And then another company said that latest forecast has dialed the sharpest edge of AI bubble anxiety. Markets extracting one last center rally from AI super cycle. Basically, even skeptics that were very critical right now, basically they're not saying will or will not. It's just about how fast the growth would be. So everybody agree that there is demand and profitability existing in a mega and powerful way. Just to give a bit of lesson on bubbles, okay, bubbles. This is not the dot-com bubble where things, a lot of the dot-com days, people had no revenue, little revenue, almost no profits at all. Okay, now this is huge mega profits, and there's a case study of the tulip mania, okay, in I think the 17 or 1800s, where in the Dutch ports they were all crazy about tulips, and most expensive tulips were selling for $20,000 or something like that. It's just madness, right? And suddenly, when prices divorce from cash flow, that's where you can define it as a bubble. But today, the AI machinery, especially on the chip side, okay, it's really powerfully driving with really cash. This is what I call cash printing machine. Okay, cash printing machine, and Nvidia is such a company right now. So Nvidia right now is 8% of the S&P 500. One company weighs 8%, and its success is driving the success of a lot of other companies as well. That's why the S&P 500 is moving towards this huge AI bull run. So I also need to stress that they do have one risk. They have a concentration risk. Four customers of Nvidia takes up 61% of their demand. So I think that's something we should be quite concerned about. Now, however, let's go back to what Tom Lee has said: 7,000 points by end of the month. Wow. Okay. The question is, will that happen? Well, I think there is a chance. Again, I don't need to be crystal ball gazing. Okay, I sit on fairly large size of US stocks. So if it goes up, I'm happy. It goes down, I'm happy. So it goes down, I'll buy some. Goes up, I'm happy because I'll make a lot of money. But I think that the case lean towards now 7,000 points for S&P 500 at least by end of the year, but maybe even end of the month. That's what Tom Lee says. But there is one risk which I want to tell everybody that could come. But right now, the earnings, okay, are all doing great, and there's a Santa Claus rally that is now rallying from an AI super cycle that could really bull run the whole stock market in a very massive way. Now, there are risks. Okay, let's not be blind to it. There are risks. Okay, and as I said earlier, there's a concentration risk of four Nvidia customers taking up 61% of the revenue, and that's kind of concerning. And of course, there is this thing called circular financing. Nvidia invests in many companies that then buy chips from them, right? So Nvidia invests in OpenAI then buys a chip from Nvidia use the money and invest in them. So you can see, right? It's what I call circular financing. So that's kind of concern, okay? And of course, there are fiscal bottleneck, right? There's not enough land, not enough power, not enough grid to drive the kind of data center growth that is fast emerging. But you know what? Okay, I think that as long as the demand is there, the supply will try to catch up. What we're only afraid is if demand were to slow down. As long as the innovation on the AI space keep going up, driving all the need towards AI, I think that we are only seeing the infancy of AI in the application side. The application side will drive the solution side on the AI companies. AI companies will then drive demand from companies such as Nvidia. So I think that we are still in the infancy. Actually, the stock market biggest risk is not on AI. I don't know why so many people were so concerned about AI, and my concern was never on AI. I've been talking about AI non-stop. day after day, nights after nights about AI, how everybody must quickly ramp up towards AI. But actually, the biggest risk is not AI, it's Federal Reserve. Whether Federal Reserve will cut interest rate in December or even next year, right? So I think that's the biggest risk that we're having right now. And that is not really a risk, right? It's a matter of when, not the matter of will. But people cannot very impatient, right? So I remember I always said, and I always quote Warren Buffett, the stock market is a place where wealth is transferred from the impatient to the patient. As long as you're like me, right? Got time to wait, look away and just chill, things will be okay. Yeah, things will be okay in the long run. As long as you are invested in globally diversified portfolios, not even in Nvidia. I don't even have one stock of Nvidia, but the stock that I invest in, there's a component of it in Nvidia. So I think I'll ride the wave, but being spread across globally across different sectors does help as well. Bottom line is, I think this bull run is real, is demand proven, proven, cash proven, and I think the we have to come to terms that this AI story is not just a dream, unlike many other bull runs, it's colossal profits and cash, cash, cash. It's a multi-year demand that is booked to the rim, over demand, under supply. So the only risk that we can see right now is a Federal Reserve risk, and more or less that has been built in into the prediction of the stock market. So I think the risk of that is somewhat not high. Okay, so I think it'll be very positive outlook. That's my personal view for the entire market. So you may disagree with me. Happy to hear you out. Okay. Now, for those people who are happy to differ in my opinion, go ahead. Yeah. My approach has always been consistent. Always, right? Always been consistent. I do not flip in my approach. Wherever the market goes up and down, my approach has always been the same. Build a financial safety net with your CPF. Roll up with globally diversified portfolio in increasing risks and returns, and just stay back and watch. That's all you need to do. Okay. And if the market goes up, just rebalance. The market come crashing down, buy during crashes. It's a really, really okay market winning formula. Thank you. I'll see you tonight for live stream. Bye bye.